Hi, it's Gail with Traders Help Desk. In this video, I want to go through the indicators and what is included in the silver and platinum package. First, both packages include all of our indicators and includes over 40 hours of video training online. The platinum package also includes a 5-day trading seminar that we hold 2 to 3 times a year, normally in Las Vegas and Greensboro, North Carolina. Now, over on the left-hand side of my screen, you see that I have what we call the meter window, and it is measuring the RSI values from all of our higher time frames in one window on multiple markets. In this case, I have it set to a 45-minute chart, and you can see that we can see the NASDAQ, the Dow, the S&P 500, the Russell, gold, crude, the dollar index, the euro, and the British pound. Anytime a market is above 50, it is considered to be overbought. This tells us that the market will probably be retracing. Anytime the line is below negative 50, that tells us that the market is oversold and a retracement is likely. So you can see that gold was oversold. The British pound was oversold. Crude oversold. The NASDAQ was overbought. So this gives you a very good indication at a glance which markets are actually overbought or oversold, and also which markets are actually moving. For example, you can see that crude, the Russell, and the Dow were moving very nicely here, where gold not so much. It was trying to decide what it wanted to do. I also have one that I measure all of the currency futures on. And as you can see, all of the currency futures are inserted in this one window. So I have the Aussie, the British pound, the euro, the dollar index, the yen, the Swiss franc, the Canadian dollar, and the New Zealand dollar. Since all of these are measured against the dollar index, what I would want to do is pick out the currencies that are actually against the US dollar. In other words, the British pound is moving up, the US dollar is moving down. Those would have been good trades. The euro is moving up, the dollar is moving down. Whereas I probably would not have wanted to trade the yen pair because it was in the same vicinity as the dollar. In this upper right hand corner, I have the market analyzer indicators, and this is our trend ATR version 2. You can see that we have the previous bar trend, the current bar trend, the ticks to the ATR, which is very important because we take all of our trades at the ATR. We also know which markets are in congestion because they are highlighted in this column. We know all of the markets that just had a wide bar, and as most of you know, wide bars retrace 80% of the time. And then in the last column here, we have the potential entry indicator. So if we have any markets that are at an ATR or at the congestion dot, it would be highlighted in this column. Directly beneath that, I have the THD ADX, and I have it set right now to a 45-minute and a 180-minute chart. This way, I can measure all of the ADX values on all of these different instruments on multiple time frames. As you can see, the Russell is the one that is trending the strongest on this one. And then on the 180, you can see that we've had a lot of magenta peaks. Anytime we have magenta peaks, we are expecting the market to retrace back to the ATR. From where this peak comes in on a 180-minute chart back to the ATR is usually a significant trade on a lower time frame. Now, to go with the market analyzer in the meter, of course, we have our charting indicators. The first indicator on my chart is the trend SR, and it actually highlights when there is support or resistance formed either on a high or on a low. For example, in this one you see there's an extension of red dots. That tells me that the market has found resistance in this area. You can also see this dark blue right here shows me that price has formed support, and this is where price is more than likely going to go back and test these areas of resistance. The next indicator on my chart is the trend ATR, and that composes a lot of different things into one indicator. Number one, we have put the wide bar in that indicator, and all of these little magenta price bars are wide bars. Again, they retrace about 80% of the time. You can also see that as price pulls back to this ATR, the price bar turns gray. That tells us that we are close enough to the ATR to actually take a trade. Anytime you see these little gray dots extending across the chart, that tells me that we are in congestion. The only time that you can take a trade when you see gray dots is when price is at the gray dot or price is at the ATR. Directly beneath that, we have the volume indicator for NinjaTrader, and this is a directional volume indicator. It incorporates price action, limit orders, and market orders, also known as delta. So in this case, we can see that price is going up and so is the delta. And then right at the top of the market, which is this bar right here, we've made a high, but there has been divergence in both limit and market orders. Now, the way the volume bar is colored is if there is a high when compared to the previous bar, the volume bar will be blue. If price has made a low when compared to the previous price bar, then the volume bar will be red. If we have an inside bar, meaning it did not exceed the high or the low of the previous bar, it will be gray. And if we have an outside bar, which means that the price bar exceeded the high and the low of the previous bar, it will be magenta. Everything that is plotted above zero are buyers. Everything plotted below zeros are sellers. I'm going to expand this a little bit because you'll see we have a tiny mark here on the volume bar. That tells us where the market orders ended. So that is very important when we're studying volume to know not only the limit orders, but also what the market orders did. And again, I would go back to this illustration here where we have made a high in price and we have divergence on both the limit orders and the market orders. Sometimes you may see that when you're using this that the volume bars are almost non-existent, and typically that is because the U.S. session has opened or we have been going through a very small volatility area. All we need to do is shrink the chart up some and it will expand the volume indicators. Directly beneath that we have the RSI indicator, and as you can see it's either blue or red. It also plots when there is divergence. For example, we're making new lows here in price, but we are not making new lows on the RSI, so we can immediately identify this as divergence. We also have built in the divergence to the ADX indicator, which is directly beneath the RSI. The ADX is a non-directional indicator, so even though we're making new lows in price, we should be making new highs on the ADX. Since we are making new lows in price but not on the ADX, that is showing us that the momentum is slowing down within this downtrend. What I did was found a way to actually identify when price is trying to flip the ATR but does it on a lack of conviction. Anytime that happens, I know that they will come back and they will test the ATR, and I can only take an entry if price is at the congestion dot or at the ATR. So the only potential entry point for me here would have been when it came back to test this ATR. As long as there was diverging volume, you could actually take that entry with an anticipation that it will go back to the congestion dot. And as you can see, it went back to the congestion dot, barely closed above it, and then came back down. If you remember correctly, when we had the trend SR on the chart, you would see that there was a line of dots there indicating that price had actually formed a resistance area there. So it's very important to pay attention to the congestion dots. Now, the other indicator that I wanted to go over that's not on this screen, I usually actually keep it on a 45-minute chart. And this is the indicator on the 45-minute chart. It's the THD zone indicator. And what it does is identify on the right edge of the chart where support and resistance is located on the higher time frame. So in this example, you can see that price pulled right up to this zone and could not break through it, and of course went down again. This is a very nice indicator to actually identify those areas. A lot of times when you see a lot of space in between it, it means there's nothing in the way of price reaching up and achieving that zone, or even if it's below, it will have no trouble going down and hitting that zone. So as you can see, we offer a wide array of indicators for our packages, depending on where you are in your trading as to which ones you want to keep on your chart. Again, I don't use the RSI on my chart as I use the meter windows. I found that that is easier for me to monitor than for it to be on the chart. So all I do is look over here. I can tell you if it's making divergence just by looking at the meter window. For example, right here, you had a zero line reject because the Dow crossed below the zero and then immediately came back up. Not all traders can actually see the meter like that. Sometimes it takes time. And I don't need the trend SR on my charts because I'm an expert at reading price bars. But I have developed these indicators for traders that do not have the skill level that I have. Now, when you purchase the indicators, you also have the ability to participate in our forums, and a lot of our forums have an Ask Gail forum topic where you can go on and ask me anything that you want about your charts, and I respond to those on a daily basis. So it gives you a sort of like a hotline to me to ask questions. You're allowed to post your charts online so I can look at them. And by doing that, we're also helping other traders because we all have the same issues when we're trading. So if you do have any questions, I do suggest that you email me or post it on the forum so I can answer any of your questions. I'm always here to help. That's my primary concern because I used to be a new trader and I know how difficult it is to actually become successful in this market.